In this video, I'm going to talk about a penny stock with serious potential. Everyone this year is looking for the next big stocks, and while the S&P 500 has grabbed the headlines with a huge year gaining over 25%, as we know, some penny stocks have the potential to far exceed these types of gains. So today I have another exciting penny stock for you guys, a penny stock that is experiencing huge growth and that some analysts rate as having more than 100% upside. Before we get into the video, if you find any value in this, can I ask you to smash the like button? It literally costs nothing, but it helps the channel out so much. I'm aiming to get 1,000 likes on this video. Help me achieve that goal. For anyone that's new, make sure to subscribe so you don't miss out on any new content like this. I'm not a financial advisor and this is not financial advice, so always do your own due diligence. Now let's get straight into it. So in today's video, I'm going to be talking about FlexShopper Incorporated. This stock is trading on NASDAQ, ticker symbol FPAY. This is the first time that I've talked about this stock on the channel, but there's a lot of exciting things going on with this company lately, and this is definitely a stock to have on your watch list right now. So first of all, what is FlexShopper Incorporated and what do they do? FlexShopper is a leading national financial technology company that offers innovative payment options to consumers. FlexShopper provides a variety of flexible funding options for underserved consumers through its direct-to-consumer online marketplace at flexshopper.com. And in partnership with merchants both online and at brick-and-mortar locations. FlexShopper solutions are crafted to meet the needs of a wide range of consumer segments through lease-to-own and lending products. As it says here on their investors' website, FlexShopper offers cutting-edge technology that enables the traditional retailer to offer their services and products to a demographic they weren't previously able to target, the subprime consumer. The omni-channel payment solutions include lease-to-own e-commerce marketplace, on-site e-commerce payment model, and mobile applications for in-store point of sale. With FlexShopper's best-in-class proprietary application process, when a customer applies for a payment solution, it does not impact their credit score, and the company has multiple payment options for all types of credit profiles, which provides value to both consumers and retail partners. So basically, this company is providing a service to customers who either need or prefer to spread the cost of purchases out over time instead of paying full cost up front. But there are a few things that have caught my attention about this stock over the past few weeks. But first, let's take a look at the most recent investors' presentation so we can assess the opportunity. FlexShopper operates an asset-light, dual-channel business model. They provide consumers with immediate purchasing power to buy products through flexshopper.com and additional corporate-owned microsites, while on the B2B side, they provide retail merchants with greater consumer demand and higher sales conversions by providing a payment option on a retail partner's e-commerce site or brick-and-mortar location. It is this unique dual-channel model that allows the company to follow its customers, supporting cross-selling opportunities and repeat customer transactions. And this has led the company to recently achieve record-breaking revenue growth and seen FlexShopper get bullish buy ratings from Wall Street analysts, which I will talk about in just a moment. Looking at the B2C channel, there is unlimited expansion opportunities through microsites. The model yields predictable and attractive cash-on-cash returns in the first year and 50% repeat customers. On the business-to-business side, FlexShopper's payment solution is supported by the addition of 4 integrated partners with significant growth in retail locations over the past 3 years. There's a high conversion rate with merchants experiencing an increase of approximately 40% in financed orders, and a percentage of repeat customers stands at 36%. So as I said a moment ago, FlexShopper recently reported record financial results. Their strategic transformation produced record quarterly total revenue of $38.6 million, with earnings increasing to 5 cents per diluted share for the third quarter 2024, and adjusted EBITDA increases 45% year over year to a quarterly record of $12.2 million. FlexShopper CEO Russ Heiser Jr. stated that 2024 is shaping up to be a transformative year for FlexShopper, as the strategies we are pursuing to profitably grow our business take hold. We are successfully adding new retail partners and to date have expanded our signed store count to over 7,800 retail locations, nearly 250% increase since the beginning of the year. Now, this is huge. These are the type of things that I love to see when I look at any growth stock for the first time. Rapid expansion, of course, but importantly, a road to profitability is key. And this is highlighted here when comparing FlexShopper's quarter-over-quarter increases. Total lease funding approvals increased 33% from 57 up to $77 million. Total revenues increased 22% up to $38 million, and adjusted EBITDA increased by 44.9%, while operating income increased up to $9.6 million. And it's a similar story here for the 9-month period. Adjusted EBITDA increased 63% up to $24.6 million compared with $15.1 million, while the operating income of $17 million compared with $8.1 million for the previous year. Now, I believe that these are very positive results, but what do analysts think of FlexShopper? And this is where things get very interesting. FPAY stock currently has an average price target of $3.25, which is 100% upside from the current price of $1.63, and this is according to two separate Wall Street analysts. Maxim Group boosted their rating to buy and set a $4 price target on November 15th, which was the day following the earnings report. So it seems clear that they are impressed by the earnings report. But since this, FlexShopper has released a ton of positive press releases over the past month or so. FlexShopper forms exclusive lease-to-own partnership with United Wheels and its portfolio of bicycle brands, which includes global and household brands such as Huffy, Niner Bikes, Batch Bicycles, Fast Bikes, and Buzz e-bikes. Now, United Wheels is a global leader in the outdoor industry, shipping over 5 million bicycles annually to more than 50 countries, generating approximately $1 billion in revenue each year. So this is a huge deal. They also announced a partnership with Tire Agent to expand tire shopping options for near-prime credit customers. Again, Tire Agent currently originates over $100 million in lease-to-own transactions annually and is a 2-time honoree of the Incorporated 5000 list of fastest-growing companies in 2023 and 2024. And this partnership also sees the launch of FlexShopper.tireagent.com. And most recently, FlexShopper expands lease-to-own solutions at Jiffy Lube and Meineke Car Centers, which again is a big expansion of service. 100 Jiffy Lube and Meineke Car Center locations with plans to add 75 to 100 additional stores within the next 60 days. But what grabbed my attention was the company's announcement just before Christmas of record holiday season results. As a result, lease gross profit increased 51% for the first 2 months of the fourth quarter, while lease marketing expense has declined over 40% for the same period. New loan originations increased over 34% versus the same 2-month period last year. But this is a result of the company's impressive growth strategy taking effect, which we can see here, the 4 key growth strategies. First, we have FlexShopper's total addressable market growth, which is supported by integrated partners and the company's standalone solution. Then the improved conversion, which is very interesting because management estimate that every percentage point increase in conversion adds about $35 million in adjusted EBITDA. At the moment, FPAY stock has a total market cap of about $35 million, so think of the impact that these increased conversion rates could have. Not to mention that the effect of the growing retail footprint. As we can see here, retail locations have increased from just 1,149 in 2022 up to over 5,000 in 2024. While retail revenue growth has been increasing significantly in 2024, revenue was up 76% from Q1 to Q2 alone, and as we've already seen, Q3 was a record-breaking quarter for FlexShopper, and the holiday period in December was once again a record-breaking period. Now, I have one last important point to make, but first I feel it's very interesting. The investment highlights, and I think this summarizes everything very well. FlexShopper has a profitable financial model that is supported by issued patents. There is a strong value proposition and high repeat customer base. There's a favorable risk profile with a solid expected cash-on-cash return and there is aligned inside ownership, with insiders owning approximately 37% of outstanding shares. Now, insider ownership is something that I love to see, and especially when insiders are increasing their positions. And when we look at market beat, we can see that insiders have been adding to their positions, buying shares within the past week. So guys, let me know your thoughts on FlexShopper in the comments below. Everything seems to be pointing towards a deep value position here, with the company just beginning to turn profitable and execute on their growth strategy. But remember that I'm not a financial advisor and this is not financial advice, so I highly recommend that you do more due diligence. As we've already seen, the stock is up more than 50% in the past 2 months, but this looks like it could be something special in the making. It's not one that you want to miss. To learn more about FlexShopper, check out the link in the description below. Thanks for watching, and I'll catch you in the next one.